Well, it's time now for a look at the latest business news and a move by China to cut tariffs on US imports. Our business editor, Stephen Carroll, is here with the details. Stephen.
Haxie, this announcement coming just weeks after the US and China agreed a new Phase 1 deal to defuse their escalating trade war between the world's two biggest economies. A cut in tariffs on the Chinese side wasn't explicitly included in this deal, but it's been linked to China's commitments to buy more US goods. The Finance Ministry says that the reduction applies to just over 1,700 goods worth an estimated $75 billion. These were levies that were imposed in September of last year. They'll now be cut, the rate of tariffs being cut from 10% to 5% or 5% to 2.5%, depending on which rate had applied. A specific list of goods affected hasn't been given, but they're thought to include fresh seafood, poultry and soybeans. Now, under the Phase 1 trade deal, China committed to buying $200 billion worth more of American goods and services over the next 2 years. Cutting tariffs will help Chinese firms buy more of these goods. Separately, the government-controlled Global Times newspaper says that Beijing is considering invoking the disaster provision in the deal because of the coronavirus epidemic. That would allow China to negotiate with the US over the implementation of some of these commitments. Well, news of those reduced tariffs going down well on the markets and trading today. Chinese shares getting a boost as a result, up over 1%. The Shanghai Composite, the Nikkei in Tokyo also rising earlier in trading, over 2%. That was in the back of some strong US economic data and hopes of containing the coronavirus outbreak. Well, another sector watching developments with the epidemic closely is the oil industry. Chinese energy executives telling the Financial Times they expect oil consumption to drop by a quarter this month in China because of the travel and industrial shutdown due to quarantine measures. The cartel of oil-producing countries OPEC is continuing their meeting in Vienna for a third day today to discuss how to adapt to the drop in demand. Oil prices appear to be stabilising after the slump that we've seen over the past month. The international benchmark Brent crude was around $68 a barrel a month ago, now $56 in trading, up slightly on the day-to-day. So we're seeing some stabilisation in those figures, but still sharply lower than they were just a couple of weeks ago. Meanwhile, shares in the electric car maker Tesla have plunged after it revealed how it's been affected by the factory shutdowns in China. The company is delaying delivery of some of its Model 3 cars to customers this month as a result. Tesla says it's planning to restart production at its Shanghai plant on the 10th of February. The share price, though, down 17% on Wall Street on Wednesday. That's after skyrocketing earlier in the week. Now, carbon taxes are a controversial measure in many parts of the world. An increase in the tax on fuel was what sparked the 2018 Yellow Vest protests here in France. Now, new research from the Organisation for Economic Cooperation and Development has shown that higher energy costs do help to reduce emissions. James Wilson reports.
It was one of the most controversial policies of France's President Emmanuel Macron. A hike in the tax on carbon emissions sparked the so-called Yellow Vest movement. Protesters were furious that they would have to pay more for fuel, pressuring the French government into delaying the increase. While an expanded carbon tax may be a vote loser, the OECD has concluded it is an effective way to reduce CO2 emissions.
The study shows that an increase in the price of energy by 10% means a 9% drop in emissions the following year. So it's something we can do that's both very quick and has an impact.
The study also found that while an increase in a carbon tax might result in job losses at individual firms, it did not increase the overall rate of unemployment. However, the downside of an increase in the carbon tax would be a rise in the cost of fuel for ordinary people, and the environmental charity Greenpeace thinks the government should compensate the least well off.
It's a problematic tool because it makes the poor pay the price for climate change when we know that it's the rich who use the most carbon.
Whatever the effectiveness of the carbon tax, the French government have promised not to increase it until 2022.
Argentina's Senate has approved a bill giving the government new powers to restructure the country's massive debt. President Alberto Fernandez is trying to make Argentina's $335 billion debt mountain more manageable through talks with its creditors. That includes the $57 billion loan from the International Monetary Fund. Argentina's finance minister told a conference in the Vatican this week that the country could not continue servicing debt that was unsustainable. Well, finally, for me, the engagement ring that's perfect for pizza lovers. Domino's Pizza in Australia has unveiled a specially designed engagement ring in the shape of a pizza slice that it's offering as a prize for the best proposal idea that involves pizza. It's worth over €5,000. The chain says that it would make for a truly domantic proposal, although perhaps Haxie a bit too cheesy for some.
I would say yes in a heartbeat. That's all I'm saying.
That is good to know.
Stephen Carroll with The Business, thank you very much indeed.